Good morning, everyone. My name is Hui Min. Thanks for joining me today. I know that I'm standing between you and the break, so I'll just stick to my time. So I'm part of the S&P Global Energy, and it's a real pleasure meeting you at WCA. So this is our first presence here in WCA, so I'm really happy to meet all of you. So over the next 15 to 20 minutes, I'll be introducing what we do, who we do, and then to walk you through our latest market updates and the pricing trend that we have been tracking. So what do we do, S&P Global? So S&P Global Energy, we are actually under the umbrella of S&P Global. So you might have heard of S&P Global Market Intelligence and also S&P Global Ratings, which used to be called Standard & Poor's, but it has rebranded in the about 2016. And then there is this S&P Dow Jones. So for us, S&P Global Energy, we are the leading independent provider of benchmark prices. I know many of you here are producers and also different parts. So we hope that we are piecing another aspect of the cement market also. So we are the independent provider of benchmark prices and market intelligence, market information for the global energy and commodity markets. So we have been serving like over 15,000 customers in more than close to 200 countries, helping them to navigate complex and volatile conditions. So we cover a lot of commodities, not just cement. We have oil and gas, the metals, and for my team I am from the fertilizers and minerals team. So our price assessments, what do they do? I mean, they form the basis for billions of dollars in physical and also the futures transactions. So producers, buyers, traders, to government bodies, and also commodity exchanges, they rely on and refer to our prices for their trades, for their operations, risk management, and to embed these prices into their contracts directly also. So this is how they are, sometimes they are using them to hedge the prices on the derivatives or also the OTC counter. So as part of the Platts Global Benchmark coverage, you might have heard of the Platts data brand and JKM, which is for the LNG, Japan, Korea markers, and IODEX for this iron ore. So these have been referred to widely, so we are calling them benchmark because they have been used all in the physical and also in these contracts prices. So all these have been referred to widely by the respective industries. So you might ask, well, how do these prices come from, right? So why is it called benchmark, and how do we arrive at all these prices? So in short, we are the price reporting agency. So the price reporters, we have a big team of price reporters in every team, like oil and gas and also for us and the cement industry. So over here, we collect the data. The reporters will call the market sources to check with the trades, the bids, and offers or indicative values. And then they will assess the prices. Of course, there's a very detailed process on how we assess the prices. If you're interested, you can let me know. And then we publish the assessments. And these assessments will be used by the market players. So just now we talk about the oil and gas and other industries. So right now we are pretty new in the cement reporting. We started last year in January, and then we have, understanding the globalized nature of this industry, we have expanded our footprint across the three major regions, EMEA, Asia, and the Americas for the prices. So that means that we have currently 7 price assessments including the first CEMDEX index. We call them Platts CEMDEX Turkey, which is the bulk cement price assessments, and also the clinker price and the freight route, the key freight route from Mediterranean to the Houston route. So this was launched in January 2025. So we celebrated the 1-year anniversary of our launch. And after that, we don't just cover Turkish. We expanded to to Asia. So we first launched the FOB Vietnam prices, FOB Vietnam clinker and also cement prices last year in August. Just now, Sinem, the earlier speaker, we met last year in July. She was, at that time, we still have not launched the price, and just now she was asking, have you, do you have the data for the price? Yes, we do have, since it is like 1 year already. And after that, we moved to started launching in the US. It is called the CIF Houston price. It was launched in this September last year. So this is the global framework. Why is it important? It is not just a collection of prices. So this allows us to look at the freight spreads and the price arbitrage, to look at the price arbitrage in real time, and also, to understand precisely, how these geopolitical shocks like now how can it, ripple through the global supply chain. But of course, these are not the end of our prices as we continue to expand our footprint and our coverage and assessments. So there'll be more to come. So that brings us to the next theme of today's discussion. Since the conflict, just now we have the speakers have covered that also. So I'm adding on to our our views. So the conflict has in the Middle East has created what many have been calling in the commodity markets across all markets, including the fertilizer market that I've been covering also. We call it the perfect storm in these commodity markets. So in cement and clinker, we know that this has not been a distant event. Now it has translated directly into tangible operational impacts like the surging energy costs, the freight rates that have been changing daily, almost daily, and the war risk and premiums that have, in some cases, have been shocking the market, because it's been raised about 50%. So we know that this is not a regional issue. It has, reshaped trade flows, redefined cost structures, and prompting some re-evaluation of this supply chain risk. So this is our Cemendex prices, the cement, Turkish bulk cement. So you see how it played out in these assessments since last year, because we launched it in January last year. We see that after significant downward pressure late last year, was driven by a combination of several factors like weaker than expected US contract negotiations, CBAM policy in the EU, and intense competition from the Asian suppliers. You look at the March, prices actually started to pick up for Turkey. So we know that as conflict escalated, the cost pressures on Turkish producers became, pretty undeniable, and the prices we see the uptick. But we compare it with the FOB Vietnam. You might see how come why there was no history, because we launched it the price in August. So we compare these both prices. We see an interesting divergence towards when the conflict started. Divergence, and then more recently is the prices start to converge actually. So Turkish cement prices moved up. There was an uptick when the conflict started. But interestingly, Vietnam's price softened actually. So we can see that the conflict has affected, the different markets differently. So for Turkey, it is more of a cost push story. Producers are on the front line of this conflict's economic impact. So energy costs surged close to 30%, and freight routes to these key routes like Mediterranean to US Gulf, also doubled. So this surging costs have pushed through directly to the export prices, which rose to more than $50. So for Vietnam, it is a demand pull story. So the market has been pulled by lower demand in the region also. So the weakness in demand from the export markets, the export destinations like Bangladesh and also the Philippines. And at the same time, we have been talking to the market sources that they said that the producers in Vietnam are more focused right now on their domestic markets because of the infrastructure's demand over there. Now focusing on clinker, we also see the similar divergence and then a bit of a converging pattern also. So late last year also, there's Asian competition But you can see that the prices strengthened for Turkey when the conflict began, also due to the same reasons that we have discussed earlier. So Turkey is facing the cost inflation, and we have been talking to the producers also that the producers are finding it difficult to absorb, so they have to raise the prices. So even though they have raised the prices, they told us that it has been still a challenging environment for them to operate in. And for Vietnam, it's the same. We have touched on the demand weakness, and like for example, the recent Ramadan holidays, and then the freight, the freight that have been weighing on the buyers also. So that's why we are seeing the widening gap, and this gap reflects fundamentally different market dynamics. For Turkey, it is a structural one, cost inflation, but the uptrend is also showing signs of softening, so that might signal some demand destruction there. So for Vietnam, the gap, we see that it might be a cyclical one. Once South Asia demand recovers, the prices might pick up again. Maybe I'll skip this for the interest of time, but we can continue the conversation later for different suppliers' dynamics. We look at the demand side here. So turning to the demand side, we see that there are different, the recovery in demand is uneven, the road to recovery is uneven. In India, of course, it is more of not so much of an import market and not so much of a spot transactions there. But by the way, for us to assess the prices, right, we look at the spot market. That's why we live in the present. So our prices, when our reporters speak to any of the contacts, they talk about the current market, not talking about the future or the past. So we see that in India, we are seeing aggressive capacity additions. Like, for example, we have in our reports, we've written that JSW Cement has just commissioned about 3.3 million tons of clinker capacity, and Birla Corporation added 1.4 million tons of grinding. So they are building ahead of demand and betting on long-term infrastructure growth, but the cement demand in the country has remained soft. Whereas for Bangladesh, which is an important export destination of many producers, their imports from Vietnam collapsed about 80% year on year in February, also in part due to the holidays and also the post-election uncertainty. But we expect procurement to pick up after the Q2, when their budget, which they'll be announcing in June, to have more clarity for the government infrastructure. But for now, it is still a buyer's market. And the US, we have earlier the speakers have mentioned already, it is have a strong demand for cement. They usually consume more cement than they produce. So whether it might become, whether it will shift away from Turkish, which is more highly priced, to more for Asia material, it remains to be seen, because the freight, it is not just the production crisis, but it is the freight crisis that producers have been, the market sources have been telling us that they find difficult in securing the vessels, and also the freight rates have been increased more than double in some cases. So the market updates and the data that I've shared with you and gathered and published in our reports, Platts Cement Weekly Report. So on here, we have a QR code here for our reports. Please scan it for a sample report, and also join us in our WhatsApp channel also, because we put up the updates of the cement market information. So I'll take some time for you to screen and join us. So inside there, it is a report, not just the prices. We have this detailed information on how we assess the prices, and the market news reports also, and our exclusive insights and conversation with the market sources. So to conclude, the global cement market, as we have been discussing, has been in a very pivotal and interesting moment, and geopolitical forces are creating significant price differences and reshaping the trade flow also. So, just now earlier on, we have been hearing the word uncertainty. Yes, it is still uncertain, but we as a price reporting agency, we try to give more clarity and transparency to the market. So here's our Platts team. We have the global editorial team from Asia to EMEA to the US. So please feel free to reach out to us also. And I'm here today, tomorrow, and hope to get together with, talk to more of you, and to keep in touch if you are doing the trade transactions. And we are always wanting to reach out to more of our contacts. So I think I have ended my presentation. Thank you so much, and let's go for a break. Thank you.